What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Wednesday, everybody. I know that investors in China's stock market this week are not having a happy week, but I hope that you guys are. After a painful period last week, US traded Chinese stocks resumed a steep sell-off on Monday and well into this week, dragged down by a mixture of surging commodity prices, economic slowdown, geopolitical uncertainty, signs of renewed technology regulatory crackdown, growing risk of US delistings, and now this week concerns about Beijing's close relationship with Russia and thus the potential risk of sanctions as well as lockdowns of megacities like Shenzhen. In Monday's video, we discussed how American depository receipts, a mechanism by which investors invest in Chinese companies on US-based exchanges, are being dumped by institutional and retail investors alike, with one investment banker calling them quote-unquote uninvestable. On trading on Monday, the Nasdaq Golden Dragon China Index, a modified market capitalization weighted index comprised of companies whose common stock is publicly traded in the United States and the majority of whose business is conducted within the People's Republic of China, declined 12% to its lowest level since July 2013. That was on top of last week's rout. Year on year, the index is down an incredible 70%. To some investors with high risk tolerance, this price level may be tempting, and indeed we are seeing some modest price stabilization in Asian trading today, Wednesday. American depository receipts of e-commerce giant Alibaba Group Holdings Limited and rival e-commerce giant JD.com Inc. dropped at least 10% each, while Pinduoduo Inc. Fell over 21%. More on Chinese technology companies shortly. The Crane Shares CSI China Internet Fund, KWEB, a $4.9 billion ETF that invests in Chinese technology companies, has slumped over 40% this year, erasing all the gains, including dividend payments, since it started trading 9 years ago. Head of market intelligence firm Vital Intelligence, Adam Christofouli, speaking to Bloomberg, described the view of many US-based investors, expressing, quote, "There's horrible, awful sentiment around China. Delisting fears and renewed COVID pressures delivered a double whammy to the few bulls left. There's wholesale liquidation, and even optimists think the space is just too hard right now. Valuations may be cheap, and the People's Bank of China is one of the few central banks easing policy, but this isn't enough." End quote. Looking specifically at technology stocks, another negative headline, which included Tencent Holdings Limited, the owner of the massively popular WeChat, there are reports that Tencent is facing a record fine for violations of anti-money laundering rules. The Wall Street Journal reports that the People's Bank of China found that Tencent's WeChat Pay allowed the transfer of funds for illicit purposes such as gambling. WeChat Pay was also judged non-compliant with other rules that required Tencent to identify users and merchants conducting transactions on the platform. This week too, heated discussions and rumors have flooded China's domestic Twitter-like social media platform, Weibo, regarding reports of mass layoffs at Chinese tech giants Alibaba and Tencent. So there appears to be deep concern for Chinese technology companies coming from both sides of the Pacific Ocean. Also this week, US bank JP Morgan Chase & Co. analysts downgraded Chinese internet stocks to sell equivalent rankings, telling clients that the companies are currently quote-unquote uninvestable. The downgrade affected e-commerce mega companies JD.com and Alibaba, as well as Tencent. In the bank's Monday report to investors, the JP Morgan analysts expressed, quote, "Due to rising geopolitical and macro risks, we believe a large number of global investors are in the process of reducing exposure to the China internet sector, leading to significant fund outflows." End quote. And it's not just US investors that are running for the hills either. This week too, in Hong Kong, the Hang Seng China Enterprises Index, a benchmark index that reflects the overall performance of mainland securities listed in Hong Kong, saw its biggest drop since November 2008, with trillions of dollars of value wiped out since the year's peak back in February. In trading today, Wednesday after lunch, the Hang Seng China Enterprises Index recovered a little, seeing a 10% boost from the low base. However, this looks like speculators, institutional investors remain cautious. One strategist at Swiss bank, Julius Baer, expressed yesterday, quote, "While it is tempting to call for a bottom after such a heavy sell-off, we believe the valuation is not low enough to argue everything bad has been priced." End quote. A strategist at Bloomberg Intelligence also expressed yesterday, quote, "We don't see a major catalyst in the near term to help China stocks, though earnings results may create some share price volatility. For a material re-rating of China tech, we may need to see a shift in regulatory tone, and we didn't get that from the recently concluded National People's Congress meeting." End quote. And a research note from domestic firm Sanxi Securities Co. Limited bluntly concluded, quote, "The Chinese A-share market hasn't bottomed out yet," end quote, referring to the shares that are denominated in renminbi and traded on the Shanghai and Shenzhen stock exchanges. Okay, next up we're going to do a deep dive into a recent article from Huawei on China's Ukraine dilemma and China's strategic decisions regarding Russian invasion of Ukraine. As always, guys, if you enjoy the content, don't forget to hit the like button. It's a huge help. And if you're watching for the first time and you're enjoying the content, you're getting some value from the content, maybe consider subscribing. It has been such a busy and crazy week over the last 7 days. It's so difficult to decide what exactly I'm going to present to you guys every day with this content. For today's video, I had to basically take about 45 pages of research notes and condense it down to about 3 or 4 pages. In the future, if this channel becomes financially sustainable, I may well move into doing China Update full time, and I hope at that time I can do both daily development videos, daily news videos like we're doing at the moment, as well as deep dive videos that are standalone episodes that take 20 to 25 minutes that look at a certain area. But for today's episode, let's jump in. In the last few days, internationally, there has been a lot of attention on a recent article from a prominent Chinese scholar, Hu Wei, vice chairman of the Public Policy Research Center of the Counselor's Office of the State Council and the chairman of the Shanghai Public Policy Research Association, who argues that China risks isolation and a stronger positioned United States if it doesn't immediately distance itself from Russia. Over the last 2 weeks, we have been discussing China's diplomatic dilemma with the Russian invasion of Ukraine, and we have examined Chinese state media and diplomatic narratives and foreign policy positions. We have also looked at US and European commentaries. Unfortunately, I cannot read Russian, so we haven't covered Russian commentary too much on this channel. I think it would be useful to discuss some of Huawei's article, which has already been censored in China itself since publication. This is the advice of a well-informed and influential Chinese scholar, which goes against the official position of Beijing. The article was first published in Chinese on the 5th of March, when Hu argues that, quote, "There is still a window period of 1 or 2 weeks before China loses its room to maneuver," end quote. The article was blocked domestically soon after attracting more than 100,000 views. It's worth noting too that Hu is a political Marxist. This is some of what he wrote, edited for brevity, and the link to the full article in English is in the description below. Quote, "Vladimir Putin may be unable to achieve his expected goals, which puts Russia in a tight spot. The situation both at home and abroad are increasingly unfavorable. Even if the Russian army were to occupy Ukraine's capital, Kiev, and set up a puppet government at a high cost, this would not mean final victory. In any case, this military action constitutes an irreversible mistake. Even if Russia manages to seize Ukraine in a desperate gamble, it is still a political hot potato. Russia would therefore carry a heavy burden and become overwhelmed." end quote. Hu then moves on to his analysis of the impact of the Russo-Ukrainian war on the international landscape. Quote, the United States would regain leadership in the Western world, and the West would become more united. Germany would greatly increase its military budget. Switzerland, Sweden, and other countries would abandon their neutrality. With Nord Stream 2 put on hold indefinitely, Europe's reliance on US natural gas will inevitably increase. The US and Europe would form a closer community of shared future. And American leadership in the Western world will rebound. End quote. He goes on to express, quote, the new Iron Curtain will no longer be drawn between the two camps of socialism and capitalism, nor will it be confined to the Cold War. It will be a life and death battle between those for and against Western democracy. The unity of the Western world under the Iron Curtain will have a siphon effect on other countries. The US Indo-Pacific strategy will be consolidated, and other countries like Japan will stick ever closer to the United States. End quote. So far, Hu's analysis has been quite sharp, especially considering that it was written almost 2 weeks ago. We can start to see why, too, it was censored in the mainland. Hu goes on to express that the power of the West will grow significantly, NATO will continue to expand, and US influence in the non-Western world will increase. In this environment, he argues, China will become more isolated under the established framework, and if China does not take proactive measures to respond, it will encounter further containment from the US and a more united West. Hu then moves on to the third part of his article, which he calls China's strategic choice. And for this, he makes 4 points. 1. China cannot be tied to Putin and needs to be cut off as soon as possible. Quote, under current international circumstances, China can only proceed by safeguarding its own best interests, choosing the lesser of two evils, and unloading the burden of Russia as soon as possible. End quote. 2. China should, quote, avoid playing both sides in the same boat, give up being neutral, and choose the mainstream position in the world. End quote. 3. China should achieve the greatest possible strategic breakthrough and not be further isolated by the West. Cutting off from Putin and giving up neutrality will help build China's international image, he argues, and ease its relations with the US and the West. Quote, though difficult and requiring great wisdom, it is the best option for the future. End quote. And 4. To, quote, demonstrate China's role as a responsible major power. China not only cannot stand with Putin, but also should take concrete actions to prevent Putin's possible adventures. China is the only country in the world with this capability, and it must give full play to this unique advantage. End quote. Now, the article is very well written in both the original Chinese and the English translation provided in the description below, and it is worth a read if you have the time. It's also rare to see a piece from a senior and politically connected scholar within the mainland so clearly articulate a position so different from the official position that Beijing has taken. Typically, scholars adopt vague language when they try to do this. The article also reminds us that there is a diversity of thought within China, though political institutional constraints often prevent thorough policy debate from manifesting itself. We should also remind ourselves, though, that Hu's view may well still be a minority position. I've spoken to several sources in Beijing this week, including prominent scholars and those who are in official circles, and all have expressed to me views largely consistent with Beijing's official position, which we have unpacked over the last 2 weeks, and in short is basically balancing an official position of neutrality to protect relations with the EU while maintaining relations with the Russians, but in fact standing with Russia and blaming the US for the crisis. That's the official position in a nutshell. State media has not led up on this official position this week either. For example, one leading article from Central State Media just today is titled, quote, US can't possibly cover up its responsibility for Ukraine crisis by spreading anti-China disinformation, end quote. Ultimately, China will likely double down on its current course of action, but if Beijing does decide to radically change course, Hu is correct in saying that the window to make such a move is closing fast. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.